Hello, today's Sunday, May 11th, 2025, and I'm Jason Shapiro with crowdedmarketreport.com. Today I wanted to talk a little bit about technical analysis. I personally am not a user of classic technical analysis, meaning looking at trend lines and breakouts and breakdowns and resistance and support. That's not my thing. Doesn't mean it can't work. I'm a big believer in whatever works for you is good, right? I think the most important thing personally for that type of stuff is the risk management side of it, that it can help with risk management. For example, you're trading something and it breaks out and you're buying the breakout. Well, if that fails below the breakout level, then it's a false breakout and you get out. You take your loss, and being able to take losses is the single hardest thing to do for people when it comes to trading. And not taking losses over time is the biggest destroyer of your trading account over time. So if that can help, then I think by all means that's a great thing. But having said all that, there's a couple things I think you can add to sort of classic technical analysis that are very helpful. Because the way I see it is not every breakout, for example, is the same. A breakout that's on very positive news is not the same as a breakout that's on no news or even negative news, right? And same thing with a breakdown. A breakdown on bad news, I mean, it's like expected. It's just the market doing what it should do, right? Whereas when it's breaking down on no news or even on good news, that's more of a message, and I think a more tradable thing over time. So I'll give a couple examples of how I look at this. This is the S&P chart. This green day right here, this big long green candle, was the day that April 9th of this year was the day that Donald Trump changed the tariff stuff, right? The markets were getting killed because of the tariff thing, and he rug pulled it on that day, and the markets rallied very, very hard, as you would think they would do. And then they spent, a few weeks here not taking out those highs, not taking out the lows, and just kind of pissing around. And the idea would be, if it were to break down from there, in particular, without any new bad news, that would be bad. And if it were to break higher from there, without any good news, so to speak, that would be good. And that was exactly what happened. It broke out on this day, and this was not a good news day. You can see from this candle that the market opened lower, right? It was quite a bit lower in the morning and then rallied because there was some bad news on that day. And yet, by the end of the day, it broke above that level. To me, that's a much better breakout, because when people chase the good news, it's sort of fast money. Hey, good news came out, buy. And that fast money has a way of getting squeezed out of a position very quickly. The news fails, it gets out, and it just becomes sort of weak money to me. Whereas if it's on bad news, then that weak money is not chasing, which makes it a lot more sustainable. And that's what happened here, at least up to this point. That's what happened here. And now we watch for how markets react to different good and bad news from here to see, what we do with that. Another example to me was election day, which was here. Market went up very strongly on election day because there was a belief at the time that the Trump economic policies were going to be very bullish, the tax policies and all that. And the market broke out. And it pulled back to those levels, and then it kind of stayed up, and then, we started going down. And the idea then was, if we were to break down below, this election day stuff, that was going to be bad. And that's not really a classic technical analysis level. That's sort of just in the middle of a range type of thing. But it's because the news, all this was now trapped longs, right? People that bought post-election, it was all trapped longs. Once it broke down below that level. And by the way, it broke down below that level before the whole tariff fiasco, right? Tariff fiasco really started happening here. Right? So that breakdown to that level, which, like I say, is not a classic support or resistance level, but it was a level in the market that was important because of the news event that happened. Once it broke down below that, the market really kind of shit the bed. So that to me was a level worth looking at, right? And I'll give you one more example of what I'm trying to talk about here, which is Bitcoin. Bitcoin has traditionally gone up with other risk assets. As the stock market was going up, it was going up, right? This was the election stuff. It went up as the stock market was going up. It started coming down as the stock market was going down. The first thing that happened here was it started to outperform the stock market. barely made new lows here, right? And this was on, the 7th of April. Whereas the stock market, if you look on the 7th of April, was all the way down here. There's the S&P, much, much lower. So step one of the technical analysis, it started to outperform for no reason. There wasn't any bullish Bitcoin news necessarily. It just started to outperform. So all of a sudden the antenna goes up. This thing is starting to outperform for no reason. Then what became really interesting to me was this day. The day it started to break higher. This was the 21st of April. And if you look what the stock market did on the 21st of April, it actually looked horrible, right? It looked like it was going to juice back down toward new lows, right? It actually tested the levels almost to the penny of when Donald Trump made his announcement about or pulling back on the tariffs. Tested to that level that day, right? The market did not look good that day, right? The 21st. And yet Bitcoin actually was breaking up to the upside that day. So again, why is Bitcoin going up here? People certainly aren't chasing it higher because risk assets are going higher. It's going up on its own volition. And that to me is a message. That's a technical analysis message. Again, there's no big support resistant line here kind of thing, but the technical message was that there was strength there, and there was strength for no reason. And you can obviously see what's happened since then. Bitcoin has really ripped higher, has outperformed just about everything since then. So that kind of idea has worked in this situation as well. So anyway, just a different way to kind of approach it. I think that these things can enhance your typical classical technical analysis stuff. It doesn't just exist in a vacuum. The market doesn't exist in a vacuum. There's news going on, there's reaction going on, and this is a combination of tape reading, which to me is watching how the tape reacts to various news events, with technical analysis. And I think it can be much more powerful than just kind of classical technical analysis alone. Just my thought. I hope that helps. Let me know what you think. Questions and comments, always welcome. Please check us out, crowdmarketreport.com. Like the video if you like it, so we can help spread the word. And I hope everybody's doing well out there and has a good week. All right, thank you. Hi, I just wanted to say if you like daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.